Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I wanted to do my weekly summary of the current buy recommendations. I believe there's 9 of them. And so one of the things to think about as we get into the middle of May is the old, everyone knows the saying, sell in May and go away. The reason for that is that seasonality has historically been soft. Um, so, you got to keep that in mind when you're buying regular type stocks uh, and common equities. So, um, the equity market is going to be a little skittish, I think, over the next few weeks. My camera froze. Hope it's working. Okay. So, um, so I'm shying away. I have a couple of equity recommendations that I'm sure you're aware of that I'll talk about, but there's a massive supply and demand gap that's opening uh, elsewhere, actually globally. So we got, rare earth shortages, rare earth material shortages, mineral shortages in the US. We've got energy crunches in Europe and Asia. We've got um, a global deficit of precious metals and industrial metals, things like copper, et cetera, and a scarcity. The scarcity is in trade is heating up. So people are starting to hoard all of these natural resources. And so you definitely want to be there. I've been kind of pounding the table on this the last couple of years, and it's definitely been the place to be. I don't think we've seen this kind of skyrocketing in equity in commodity prices since the 70s. So, um, uh, and I think you're going to see interest rates much higher also. So, um, I want to, cover some of those topics and some of those recommendations that I think are really timely right now. So let's get into it. So the first is MP Materials, and this is a U.S. based company in California, really the only one of size, as China has a 60 to 70% market share of these minerals that are used in everything from electric car batteries to all kinds of things. So um, this is still really viable. So if you look at this bullish wedge. Again, it's downward sloping, which is kind of counterintuitive that it would be bullish. We got the breakout, and we had a five-wave advance, 1, 2, 3, 4, 5. And now we're retracing, and we're within the fourth wave, which is a normal retracement. And we're coming down close to my stop. I bought at 61. My recommendation was 61.90. We're at 63.73. It's had a nice pullback, and this is a good place to purchase it. So, REMX is the global rare earth minerals ETF, which also looks good. But I think this looks really good. I'm expecting a new high north of 100, and you're at 63, 64, somewhere around there, 64. So you got a lot of upside here. Pretty straightforward. My stop is at what is that? 60. So stop is at 60. We're at 60. Let's call it 64. You have, and you should really follow your stops. I think a really good example was GameStop, one of my buy recommendations that I got out of with a very small loss, and now it's down probably 15% from there. So, I know you don't like to sell for a loss, but if you keep your losses small, and you let your winners go big, you're going to really gain. So I think this is a really good buying point on MP minerals. Okay, just 2 days ago, I recommended natural gas, and natural gas has been kind of the dog of commodities for a long time. It had a spike back, I want to say that was like 6 months ago, and it, was up more, probably up 200%. And now it's come back down. And I'm going to show you UNG. This is the ETF that you can buy. And I'm not showing you the NatGas futures because you can't buy it anyway, unless you're a futures trader, which I don't think a lot of people on my channel are. If you are, let me know. And so coming into this low, if you think of a big downtrend here for the last several months, and we have what's called an ending diagonal pattern, where these two narrowing trend lines come together, and they're found, according to Edwards and McGee back in the 50s, they're found at the end of major of, of market trends. And once they break out and we got a retest, that's really typical. You can usually you can see this whole ending diagonal getting retraced. We do have a smaller bullish pattern currently, a bullish inverse head and shoulders pattern, which watchers of my channel have seen many times. And it's like a man or woman hanging upside down with the neckline here, the blue neckline, the left shoulder, the right, the head, and the right shoulder. And if you measure from the bottom of the head to the neckline, this is telling us we're going to 12 or 1210, somewhere around there, which will really get us started. But again, I will attach the natural gas uh, video that I put out. It's in more detail 2 days ago, and you can reference it. The potential here is, 200% potential upside or something. But I will warn you, natural gas is, for me, the most volatile trading security that there is. I would say natural gas and silver. Bitcoin used to be, it's not quite as well, I guess it probably is, but those are very, very volatile securities. So you want to weight your purchase accordingly. You don't want to put 50% of your portfolio in natural gas, but I think the potential is really big here. And having said that, I'm going back to a buy rating with Antero Resources. So this was actually, we had a big gain in Antero Resources, God, I don't know, 8, 9 months ago. Again, I will attach that more in-depth research piece showing you the big consolidation that we're in, and where we purchased that and had a big gain, and then we had a smaller loss, and then we purchased here and we got a really nice gain. Um, I don't have the dollar amount. I want to say that's about I don't know, close to 30% or something. And then we had a 10% correction. I purchased it again, continued to come down. I didn't have a stop in place, and I went neutral. Got stopped out here, which was actually, it was my stop. I'm sorry, I did have a stop, and that we got stopped out. And now with the bullish outlook on natural gas, I'm going to buy that back here. We also have a positive divergence down here. We have a higher low um, on this recent dip downward. So some things are signaling that this could really take off. So if you're into just equities, you might want to buy Antero Resources. If you're not afraid of commodities, I look at all these things the same. I don't even look at the symbol on the chart. I try not to. They all work the same way, whether it's a commodity, currency, stocks, interest rates. So anyway, I'm changing my rating back to a buy on this, taking a small loss. Okay, precious metals. Again, wow. Okay, precious metals, silver. Went to a buy recommendation back on April 9th at 68.39. Again, we had a falling wedge structure, and we broke out. We retested that. We're having a big week this week. Actually, today was most of it. I think it was up 5% today, maybe. SLV, this is the ETF for silver. So, what you should have been doing today is selling a little bit. Um, I raised my stop just a smidge up to 64. So, still bullish on silver, looking for a new high here. Platinum, the same thing. Um, a bullish wedge, counterintuitive with it declining all these overlapping waves, a breakout, a retest, and a big up week. So, if you had, I don't know, platinum's almost $200. So I don't know, maybe you have, uh, whatever you have, you just touch it, just sell something to lock in some gain. There's no commissions anymore on any of this stuff. It's amazing. You used to have to pay $50 or $100 to sell 5 shares, but you don't have to do that anymore. So a more conservative way to play this is GSG. This is the iShares Commodity Index. This is very energy heavy weighted, 70% in energy, and most of that is crude oil. And yes, I am bullish on crude oil. And as I spoke about, I've chosen this vehicle to tout. I probably would have got more viewers if I would have done oil. But this is going to move with oil. It also has about 18% in agricultural commodities with corn, soybeans, and wheat on fire. It has some industrial metals. It has a little bit of precious metals. But we bought way back here. This was a 3-year consolidation. It goes back further, and we purchased that. I think it was up like 43% up to this spot. We let it decline a little bit, and then we bought it back at 31, and then we sold it again. I'm sorry, went neutral at 34.99. That was a 13% gain in a couple of weeks. And again, I always keep a minimum position, and you got to determine that. If you have 5% in this security in your portfolio, maybe your minimum is 1%, maybe it's 2%. Mine is 1%. So when I go neutral, I still have 1%. When it comes back down and I buy it again, and I might add, if my maximum is 5%, I'll add 4%. So anyway, we went bullish again here after a very brief dip, and there's some things that are suggesting that oil is in the middle of a third, and I will attach this one also, is in the middle of a third wave, according to the Elliott wave theory, which third waves are the most prosperous. They move the fastest. They have the biggest gains. So if this is a third wave, this thing could really, really go. So you want to have some exposure to oil. I think, with oil being up to 100, it may be easier to buy this than buy a bunch of crude oil. So that's it with commodities. It's plenty. So I don't like to have everything in commodities. Couple of stocks, value stocks. Caesar Entertainment. Uh, this is a this was in like a 2-year downtrend, and I can't remember, the peak was like 100 or something, and now it's down to like 20, 28, 26, 27. So what we have here is a potential bullish inverse head and shoulders pattern with the left shoulder, the head, the right shoulder, the neckline. Yesterday into the close, we had a huge sell-off. The thing was down like 8%. I don't know if somebody had to bail, some big hedge fund or something. Luckily today it's bounced. We really want to keep it above this confluence of moving averages, because that promises us a new higher high, which would get this pattern all intact. And then we have, potentially some big, big upside, but we got to get through this week. We get some market weakness. We got to hope this holds. And, the potential upside is 70%. It's huge. So we'll see if the market can hold up. I think if it does, I think Caesar Entertainment will do really, really well. And Sprouts Farmers Market. One of the viewers today told me they bought some options and they made over 100% on this. I'm so happy. Like when people do well. And what we have here is a inverse head and shoulders pattern. Got the left shoulder. The previous one on Caesars Entertainment was a weekly chart, which went back, it's about a year long, so pretty good size. This one is about 6 or 7 months. So it's a little smaller. This is a daily chart. So each one of these candlesticks represents a day of price action. So we had a left shoulder, the head, the right shoulder, symmetry, not the greatest, but okay. You got a big gap that should be filled. Usually these gaps get filled. Um, here's where we purchased. Our price projection is 105, 30% somewhere around there higher. These price projections are landing areas. They're not going to be exact, even though a lot of times they are pretty damn close. Today we had an evening star where we started out the day and traded way up. And then by the end of the day, we were back down by the low of the day. That's kind of considered a bearish 1 day pattern. It's not a weekly pattern, which would have more magnitude. But, I don't like the way it ended, but this pattern's still intact. I'm still bullish on it and a lot of upside. And stocks that are kind of quiet, I really like because I don't have to update you very often, and you don't have to think about it. And I think when investors kind of don't over analyze things, they do better and get the jitters. And Union Pacific broke out of this massive pattern. As a pattern recognition guy, it's like those little inverse head and shoulders patterns I just showed you. Now, this is a massive pattern, and this goes back 1, 2, 3 years in the making. And it broke out, and I missed that because it went so fast, and I don't chase. But I bought it when it came back down, and the price projection of this is 335, which is 30% upside. Now I don't know, we're probably 20, 25%, but if you sold any on this big up bar, like I did, I forgot how much. I think it was up like, I don't know, 10% in 1 week or something. I'd be selling some of that, and now I'm buying those shares back, and it still looks good. It's really intact. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Let me know if you like this format of covering all of them, or if you like shorter, just one at a time, one-offs. Also, let me know a couple of things I'm thinking about is a live hourly trading session during the day. I see under searches that live trading is something that people really search out. So I was kind of thinking about that. Um, and also possibly like a 5 minute educational thing on technical, on how to put a stop in, or how to do, uh, how to buy a triangle breakout or something like that. Let me know what you think. Thanks. You guys have a great evening. Good trading to everybody. Adios.